Are assumable mortgages a popular and good option in this current market? So are they a good option? So let's talk about what an assumable mortgage is first, just to be clear, because it's not something that has been popular, but I can tell you right now, with the market swinging and changing the way they are, it's going to come back into popularity very shortly here. So let's talk about it. So what's an assumable mortgage?
Okay, so an assumable mortgage, most mortgages, at least the ones with the top 5 banks, and some of the B lenders as well, have a clause in them that says they can be assumed. So when we sell a property, we usually pay off that mortgage, take whatever money is left over, and we move on. But another way of selling a property can be by selling it with the mortgage. So somebody actually takes that mortgage over. They assume that mortgage. They still have to qualify for it, just like they would have to qualify for their own mortgage, but they're taking your mortgage over if you're the seller. So the benefit for you as a seller is that, number one, you don't have your payout penalties. Maybe you're locked in for 5 years and you want to sell this year. You don't have your payout penalties because somebody is taking over that mortgage. You're not paying it out. So that's a benefit for a seller. Another benefit for a seller on an assumable mortgage is if they have very little to no equity in that property. So maybe I bought a property for $100,000. I got a $95,000 mortgage.
I have no room to pay a realtor.
CMHC added on another $5,000, so it's at $100,000, and it's worth $100,000. How do I sell this property? Because I got to pay a realtor to sell it. So what you can do is advertise it with an assumable mortgage. Somebody assumes that mortgage, virtually gets in for zero money down, and that's the benefit for the buyer, is they can get in for lower money down than normal. Maybe yesterday's interest rates, if it was locked in a year ago, instead of today's interest rates. That's another benefit for a buyer. And as we talked about for the seller, they're able to actually sell their property and not have to pay out all those big fees.
So the question is, are assumable mortgages something that we should be looking at in this coming market? And our answer is absolutely yes. We found that when you've got, properties that have gone down in value, people will often, owe close to the value of that property. Whereas they had put a down payment down, they may lose that. But right now they're looking at not only losing that, but also sitting there with the heavy monthly cost burden. And that's what people want out from underneath. So you can take that off their plate. You assume that mortgage. You do have to qualify now. You go to the bank and you have to go through all the rigors of it. The benefit is a low down payment for you. But yes, there's going to be a lot of properties that are a lot closer to what they're valued at versus what is owed on them is becoming a lot closer. So yeah, we're going to see assumable, and it's a great avenue to really focus on. So, all right.